Let's dig into the economic fallout in Russia, but also elsewhere, that we've seen over the course of the past 6 months. Joining us now is Bloomberg's Lizzy Burden with analysis. Lizzy, good morning. So what's been the economic impact on Russia? Let's start there. Are the sanctions working? And if so, are they working in the way that was intended?
Anna, even though we're 6 months in, it's almost impossible to tell, partly because the data coming out of Russia are almost certainly unreliable, more unreliable than before the war. And then on the other hand, this idea that sanctions are crippling the Russian economy does seem to be overstated. The Russian PMIs have bounced back since May. Chinese exports to Russia have rebounded. And even though the price of oil and gas has gone up and volumes are down, value terms exports are up. So it's lining Putin's coffers. But the plus side, if you can put it that way, as Berenberg puts it, is that sanctions are a slow poison. So you've got the brain drain Russia's suffering. It's estimated 300,000 people have already left, and they're the tech-savvy, entrepreneurial, young, urban people. More will go the longer this carries on. And even if the war ends, Europe's likely to wean itself off Russian energy as fast as possible. So the West can only hope that the pain's worth it.
Good morning, Lizzy. So the takeaway is that Russia, the short-term impact has been less than expected, but we're still expecting the long-term impact to be major. On the other side of the equation, which European countries have been hit hardest?
Well, we have to acknowledge the cost to Ukraine. The IMF expects its GDP to be down 35% this year. Russia's blocked its access to the Black Sea, which was the artery for 80% of its exports. So while grain prices are soaring, they can't get out. They're stuck there. And factories are being used to house refugees, to make supplies for the fighters. And so production is stalling. Aside from Ukraine, no, Germany and its eastern neighbours are bearing the brunt of Russia cutting off energy supplies. Everyone in Europe scrambling to stock up for the winter, which means that wholesale gas prices are up. The Belgian Prime Minister said on Monday that it could be 10 hard winters ahead. So you saw in the PMI data yesterday, we're expecting a recession in the Eurozone and the UK. It seems that we're already in the early stages of that. So it's a headache for central bankers having to hike into recession, and it's also incredibly unstable for politicians. In the UK, we don't know how the next Prime Minister is going to handle this, and that's creating jitters in the market.